Arvind Subramanian is addressing a press conference. Let's cut and live.
The minister was also supposed to be there, but he had to go elsewhere at the last moment. As you all know, this has been kind of a little bit the international, it's officially, the UN officially designated 2016 as the International Year of Pulses. And I think for India, it's come at a very kind of important and salient point in time. Because we've been having our own challenges with the pulses sector. So a couple of months ago, the government set up this committee, which I chaired, and essentially the remit was, and I want to make this clear, the remit was fairly narrow and focused. This is not a report on everything to do with pulses because, as you know, chief economic advisors are meant to know about macro policy, not tur and urad and mung, although I've learned a little bit as I've gone along. It's not about all the issues related to pulses. It's about, MSP and related policies. I've had the benefit of wide-ranging consultations across the board. My colleagues who you see here have helped enormously in writing this. And I just want to begin by the presentation by saying that, the way I see it is a little bit that what is happening around pulses is really an opportunity which the government is seizing. It's really an opportunity to really elevate pulses to the kind of status and attention, policy attention, that it deserves. And in some ways, at the risk of making a gaffe, I want to say that, pulses have been for long the stepchild of Indian agricultural policy, with the favored child being cereals. And this is a way to kind of redress that imbalance and really focus on the sector. So my presentation, which I hope won't take more than 10 to 15 minutes, has three parts: background, analysis, and I'll go through some of the main recommendations for you. And the background, of course, is that we had two successive years of weak monsoon, which led to a really sharp drop in domestic production, which in fact then led to this big increase in imports, which of course, because of this shortfall in production, we've had this big price increase. And that was really the focus of attention for a very long time. But of course, I think something more, even more complicating has happened very recently, is that as a result of the monsoon, as a result of high market prices in the run-up to the Kharif planting season, we've actually, in anticipation of a record crop, we've seen dramatically declining prices. So this chart shows you, the CPI, red is pulses, all of the products. We saw this big run-up, and now this sharp decline, also partly because global production has also increased this year. So it's really a challenge. This kind of illustrates the classic problem of volatility in agricultural markets, that things go up and things go down, and so this volatility is what I think we're trying to address via whatever recommendations we're making in this report. Now, background, why pulses? I think that the average Indian suffers from protein deficiency. I think if you look at this chart from the IMF, Indians consume about half as much as other countries do at a comparable level of development. And also, it turns out that actually pulses are the most cost-effective way compared to other sources for getting proteins, about half to one-third the cost relative to milk and meat and poultry. And so that's the kind of normative case for why we should increase pulses. And of course, what we've also done is we've done a simple demand projection over time, and this is for tur. You'll find it for urad and other pulses as well. Essentially, if you look at demand and supply, that mismatch is going to rise dramatically over time because the demand for pulses is much more elastic than the supply is. And if you add in the fact that you need to build up buffer stocks, what we get, that yellow bar is the projected excess demand over the next 10 years. A simple number is that today the rate of growth of supply of pulses is about 3% a year, if you exclude the last two near drought years. We really have to up that to about 8% a year if you want to avoid the kind of difficulties we had over the last two seasons. So The other very important point to make here is that unlike in cereals, where in fact if you have excess demand, you have the option of getting it via trade, via imports. That option is much more limited in the case of pulses, especially for tur and urad, which are mostly domestically grown. So in a sense, I mean, one way I like to put it is that since we have chosen in cereals to build food security through domestic production, if that is a good policy for cereals, and people will debate whether it's good or not, it is true in spades for pulses, because the option of getting it from overseas is even less so. So the bottom line is that we need to boost domestic production and productivity in pulses as a way of addressing all the challenges we've seen, as a way of boosting farm incomes over time. So that's the background. Now, I'm going to show you a series of charts, which, I'm just going to show you because my colleague Kapil here is a really cool charts that you should see just for the sake of seeing them, and I hope you'll reproduce some. So for example, we've produced for every pulse the top producing districts and top consuming districts. And I think it's a really cool chart. You see where the production takes place and where the consumption takes place. And you see there's a real, production is concentrated, obviously consumption is more dispersed, but also there's a kind of mismatch spatially, so that any policies that you think of needs to also take into account the need for efficient transportation and distribution. So I like this one very much. Tur, for example, the consumption is mostly in the south and in UP, whereas production is mostly in the west and to some extent in Andhra Pradesh. So, so these are just cool charts which I want you all to see, and the report will have them. So now we get to the heart of the analysis. What is the heart of the economic analysis that we do? So, see, essentially that we set MSPs, as you know, we set MSPs for every crop, and the CACP, the Commission for Agricultural Costs and Prices, calculates these MSPs. So one kind of methodological change, hopefully it's an improvement, is that we have come up with a more enhanced way of calculating MSPs, and one of our recommendations is that the CACP should now very seriously consider adopting this methodology for calculating MSPs. And the way we do it is to say, let's take pulses, let's take tur, for example. The way to set incentives to boost production is to think of what the competing crop is in any location, which will be location specific, and then say, in order to incentivize the production of, say, tur in Maharashtra, we need to take into account what is the normal return for the competing crop. It could be cotton or sugarcane. What are the risks associated with cotton and sugarcane relative to tur? And very important, I think, is what we call externalities, what are the positive or negative social benefits that arise from growing cotton and sugarcane relative to tur. And it's this kind of methodological thing that we've tried to build upon, and we've used this to come up with MSPs for tur, urad, and gram, which I'm going to tell you what the number is. But let me just give you just to take you through the tur calculation. So as I said, you have to identify location-specific competing crops. And then we have to say, what is the risk of the competing crop versus tur? And what you find is that, especially compared to cereals, and you'll find a table in the report, you find that because pulses are mostly grown in rain-fed areas, whereas cereals are grown in irrigated areas, the risks, if you look at the relative risks, for rice in Punjab, for example, versus, tur in Maharashtra or Madhya Pradesh, it's just orders of magnitude different. Therefore, I think the policy implication is that we need to give a price premium to overcome the greater risks that's associated with cultivating pulses. The last methodological is externalities. This actually goes back to work done by Professor Ramesh Chand at Niti Aayog, which is something that we also built upon in the economic survey. We feel very strongly that good public policy, when you set prices and incentives, they should take into account the positive and negative benefits of growing certain crops. We've compared here, for example, what are the social costs of growing tur versus paddy, tur in Maharashtra versus paddy in Punjab. And what you find is that, paddy uses much more fertilizer, much more water. It depletes the soil of nutrients. It emits greenhouse gases. And we haven't even taken into account the other externalities, like, when you burn paddy husks after harvest, the environmental pollution that happens all over North India. So these are social costs that must be priced. In contrast, if you look at tur, for example, it uses less fertilizer, less water. It fixes nitrogen so that it replenishes soil quality. It has fewer greenhouse gas emissions. So if you calculate the net differential in social costs, it's something like 13,000 rupees per hectare, which kind of roughly translates into something like 20 rupees per kilogram. So policy should take this into account. And that's what we kind of try and calculate. So to cut a long story short, when we do this calculation for MSP for tur, broadly in the rain-fed areas, we think that it should be about rupees 60 per kilogram for tur. That is our preferred tur. When we get, when we start growing, if and when, I hope we will, do this in Punjab, and maybe kind of substitute a little bit of irrigated paddy for tur, the required price is much greater. I'll come to how we tackle that in a moment, but for the moment in rain-fed areas, tur should be something like 60 rupees a kilogram compared to the current MSP, which is, I think, 52.50 for tur, if I'm not wrong, or something like that. So our recommended MSP, and then in the future we'll talk about that when we come to Punjab and what the MSP should be. So we have these recommendations, which I'm going to spell out in just a second. The last analytical point, and it's a very important point, which I think for public policy, which I think I've certainly learned, analyzing the pulses market. So this is, why do we need MSP come procurement? Essentially what we find is that, if, for example, this season, we take, say, prices go up, and we say, oh my God, prices are going up, therefore we need to bring prices down via, let's say, export bans on pulses or export taxes, and thereby, if we depress prices, in this particular period, we will help consumers. But because we've depressed prices this year for farmers, it will affect production decisions, acreage decisions, supply the next season. So I think it's therefore, so this is a chart that basically shows the correlation between quantities produced in time period T against market prices prevailing in T minus 1. And it's a very strong correlation. So one, couple of, I think, implications follow. You want to be able to prevent prices from growing too far down for farmers because it takes, it extracts a cost in the future. And so we need to be, and that's why, the MSP, and of course in this case, MSP means you have to back it up with effective procurement, otherwise it's meaningless. We've been very, very successful at stabilizing prices and via procurement and MSP in paddy and wheat, but we've been less effective at doing so for paddy, and this is really a chance and an opportunity which actually the government has begun really on a really war footing, is to gear up the procurement machinery so that we're ready to procure at MSP. So the analytical point is that MSPs and procurement is important. Also, any other policies like stock limits and export bans that give you apparent benefit in one time period take a toll in the next time period by way of farmer decisions and farmer incentives. So let me end by quickly summarizing. What we do in this is that, there's a table. So for all of you who don't want to read the whole report, I would urge you to read the whole report. But I know many of you the whole report. I would urge you to read the whole report. But I know many of you will not, at least for tomorrow's some recommendations by topic, and also we kind of provide a suggested timing for that. Most immediate is, you see, what is happening even as we speak is that I showed you prices declining. In the case of moong, arrivals have started, and in some cases, moong prices are approaching or even dropping below MSP. So the first recommendation, which in a sense is really a recommendation which is what the government is doing already, that the government procurement machinery should be on high gear to ensure that the procurement of Kharif pulses takes place at this season's announced MSP. That's really, really important. I think we should be on war footing, and this is what will kind of elevate pulses and the attention that we give pulses, because it will signal to farmers and consumers that, you know, we're very, very serious about pulses. And I think this is what, and you know, just as a follow-up recommendation, I think to ensure effective procurement, we are also saying that there should be very high-level monitoring weekly, you know, with physical verification, and also I think a whole communication, strategy is necessary to create credibility and trust that government is in fact doing so, because there's a history where procurement has not been as effective in crops outside cereals. The government announced a target for 2 million stocks of pulses. I wasn't very sure where it came from. We did some analysis. It turns out, coincidentally, that the number that the government announced is what our analysis also throws up. 2 million stock of pulses, but I think we've added that we need also targets for individual pulses, especially tur and urad, because these are the ones that we can't easily import. And what we say is that these stocks should be built up gradually, but opportunistically, buying when prices are low. And I think this season is going to afford a great opportunity to actually do the buildup of stocks, because we're expecting, record production across the board. Acreage has gone up by some 22%, and we expect, I think, 21-22 in production this year, well above the 19.3 that was the previous peak in 13-14. Now, we've also said that, given that the MSP we've calculated for various crops, we think for the Rabi gram it should be 40 rupees per kilogram. Compared, I think currently it's about 31 or 32. And then we've also said for next season, tur and urad should be at 60 per kilogram, substantially higher than this year's MSP, of course corrected for inflation between now and then. So I think a big ramp up in MSP combined with procurement is the one fundamental way of building up production, domestic production, and improving productivity. Now, we don't say a lot about research in pulses, but remember that research in pulses is neglected partly because the incentives to growing are poor. So we've spoken to the scientists, and all of them are pretty unanimous in saying that if you can improve the incentives to pulses, I think there will be a demand effect on research. And so this is another, I think, benefit from this strategy that we're proposing. Now, the more tricky one is that, what happens when new varieties come up, especially those that could potentially be grown in irrigated areas. As you saw, the MSP at which it becomes competitive is something like it's over 100 rupees a kilogram. Now, I think it's very difficult to have that, because remember that you can't have location-specific MSPs. You have a uniform MSP.
Okay, that was the Chief Economic Advisor. We'll keep cutting back to that if there are any other important pointers coming out. But Manisha, what stands out? You've been tracking this space for a long time. Is this enough to actually do what the CEA was saying, increase production and productivity?
Well, on paper, it does look very nice, but really seems to be seen on how really